Hello guys, this is Progressive speaking. Welcome to my YouTube channel and press the subscription button and turn on the notification button as well in order to get the notifications whenever the video drops. So on the Euro USD we've been trading. We are going to do something about the 1 hour chart or time frame today. But before then, I want us to see how far the market retraced. We were projecting somewhere around here, but this is a major retracement, as you can see, as a result of what is going on in the US. The price has been critically unstable, So let's go down to 1 hour time frame and see what we have there. So in this place, obviously you can agree with me that the market has retested the previous month, the previous high of the month. So you can see, for instance, in the monthly time frame, this is the high of the previous month. Here is the candlestick. You can see it retested and even passed a day. So definitely there should be a fall this coming week in Euro USD and also the other pairs that follow along with it. So let's go back to the 4 hours time frame. Let me show you something that is left here. Remember what I told you about this bull power and bear power. So the bear power is the red color, the bull power is the green color. I told you once the red tested and the green appeared, possible major retracement is about to occur, as you can see here. And of course, the signal line of the chart, the MACD cross the buy line, waiting line, and of course get to the heading from buy line. So something is displaying here. And when you find this bullish power, that momentum that it gathered in this place, you can see another sign that the market is still falling. So now what we will do once the market opens next week is to wait patiently for the even if you make entry, a set entry from here, it can be a bad option, but the only thing is that you have to use a proper risk management. A situation whereby you won't just go into the market because there might be a spike, there might not be, but the market has gotten to a place it must come down. So, but before then, I want you to understand that the signal line of this MACD, this red line, has not never gotten to the strong sell line in the indicators platform. So if I were you, I will wait patiently for a lot of 4 hours candlesticks to appear. And of course, when I find the sign here, and as you can see, the relative strength index have crossed below the signal line of MACD. So you wait, because there is possibility for market to range here before pushing, just like what it did these very days that just finished. This week that just finished. So definitely there must be a range to add up, and of course, every month or every week it used to retest, or every day it used to retest the previous price before it to start either moving down or up, in the case of up and down trend. So before making a sell, you have to wait for proper retracement. That's the point. So now in the 1 hour time frame, let's do the proper analysis of what you should always check every day before making entry. So here, this is where the previous the 5 days of the week. This is the Friday, the Thursday, the Wednesday, the Tuesday, and the Monday. This is where the market started reacting. So when it finished reacting and of course started retracing, you find that this moving average is crossed here. So when it pushed to meet the first chart, if you watch the previous video, you see the chart which I analyzed and screenshot and pasted in one of the videos. So when it retested the resistance level, it pushed down and kicked off again as a result of the fluctuations which has been happening, or the instability of the market. So but if I were you, what I would have used is the setup, which is the moving averages. Like I told you, at this point you saw what displayed in this place. A lot of bullish engulfing candlesticks kept appearing and reappearing. You see this one, you see this two, you see this the third one, the fourth one, which closed the market the previous day, and the fifth one here. So which opened the market. Look at another one, look at another one. So there's a strong signal for uptrend, continuation of uptrend at this point. So but in the case of this coming week, let's see what the chart.
Perfect.
This is a sign that there will be a motive for next week, another wing to form a new M format. This M format doesn't have the capacity to push the market down. There must be a new M format. That is one move. Either the market might push up before pulling down. But when you can see that it no longer has the power to come up to this line, and started developing further in between. confidence on a proper sell. And if it crossed, what you should be always waiting on daily basis. Like I told you, these lines indicate where the market open and close. I will close the previous day and open the new day, close the previous day and open, just like that. So there is more week. So whenever it develops the bearish engulfing candlestick, you make a sell. That's another thing. So if it develops, then you should have to wait, because there is possibility for the market to break down or up. So whichever way, but the fact is, whenever it develops a downtrend, every day at around 7, 6, 8 o'clock, using GMT time frame in the morning, we start looking for this bullish engulfing candlestick. If it doesn't develop around that time, it will develop around 12. That is another time it used to come out. So before you make an entry, but before then, if this moving averages did not close above each other or below each other properly, indicating an up or down trend, it shows you that the market is still heading up. So, but from the line you see here, there is possibility for the market to range at this point before retracing to this line, because of course there must be a massive retracement that must push it to get to this chart line you see here, or signal line you see here. So that is it in 1 hour time frame. On daily basis, as you can see, even in this place, there is always a bearish engulfing candlestick. You look at it here, it closed the market, the next day the market fly down. Look at the same thing after ranging the flowing day. This is the bearish engulfing candlestick. That is to confirm to you that there is still a possible and massive sell. Then you make your entry around here and look at the same thing here, bearish engulfing candlestick, just as you see in this uptrend. Look at the same thing here. Look at the smaller one, the market went up. The same thing happened here, because as you can see here, when it got to this line, it pulled down, got to this place, the bullish engulfing candlestick started developing one after another until the moving averages crossed again. But at this point, there's always a no sell option. So because there is no connection between the moving averages and the candlesticks, so that's why we wait when you see this kind of stuff around it. So the following day, same thing started developing from the previous day until the new day. You see the uptrend, the same bullish engulfing candlestick. So just like that, when your role is to exercise some patience until you find the reason to join the trend. When you just find that the moving averages have crossed properly, then you wait for a retracement. If you cannot join immediately, in order to not to be in a danger zone, you wait patiently for it to retrace. As you can see in this place, there is proper retracement at this point, or even at this point before this person or one can make a trade from this point. But it's not always advisable, because the market is about to close at this for the day at this point, so it's not an option to buy. So it's always at that between 7, 8 to 12 using GMT time frame or 24 hours time frame in the morning, that you should look for better decision to make. If not on this particular currency pair, in other currency pairs. If you don't find tradable options in Euro USD, you go to other currencies. But you should have it at the back of your mind that the major movement makes in the morning or by 12 o'clock, depending on where the market finish reacting. Look at this final, the last bullish engulfing candlestick came out in this day around 9 a.m. But before then, there is this one here around 4 a.m. There's this one here around 5 a.m. and before this particular one appeared at 9 o'clock a.m. So that is it, and you jot down all the text, and always either you're going to write it down somewhere else around the wall or around your trading vicinity. So when something you find in those text as it's appearing or that is accompanied in all those videos, the part 1 of this video to this part 5, if it doesn't come out, do not make a trade. You wait patiently. Perfect. Use it to guide your moral or your mind in the market, because it's very necessary to apply patience. Patience is the most an important aspect of the trading or trading skills. Every trading skills, no matter the strategy you are using. So, and as you can see in this place, the signal line has gotten at this point to cross the 80 and strong sell line. But instead of the market to push down, whatever decision that moved the market to this point shows you that this is normally that this movement is not supposed to occur, but maybe it's a kind of big market deciders or decision makers that made the decision that moved the market, or either political issues in the United States at this current time that pushed the market up once more. So at this point, you can see the signal line has pulled down in 1 hour time frame, but could not sell because of the option you have at the 4 hours time frame. So it is not yet ready for a sell in the 4 hours time frame, because there is a lot of market ranging that need to occur at this point before the retracement. So that is why the 1 hour time frame is hanging. Subscribe to my YouTube channel and turn on the notification button